Welcome back, folks, guys and gals. Greg for another come learn with me session. I beg your pardon. Do so many different programs. This was a good article that we picked up and that you all liked and shared from last week. So let's take a look. European biotech investors brace for volatility in 2022. Okay, as does everyone else. After gathering huge investment funds in 21, European biotech investors took a breather in the first quarter of 22 with the plan to steadily fund private biotechs amid a tumultuous public market. Yes. The last years have seen record-breaking amounts of money flowing to biotech investors, with almost 10 billion euros reaching European life science funders last year. This accompanied an impressive surge in funding going to private biotech companies. However, ongoing volatility in biotech public markets, along with the lack of big pharma acquisitions, has led to a more cautious approach from venture capitalists in biotech. In the first 3 months of 2022, for example, the amount of funding going to private European biotech companies fell steadily compared to the end of 21. This echoes a fall in cash going to European biotech investors in the first quarter of 22. Wow, that's falling off the cliff. Not unexpected, I guess. European life science investors that did announce new funds in early 22 include the European Circular Bioeconomy Fund, Newton Biocapital, and Kerma Partners. The funds, while large, were still fewer and smaller than the mammoth funds raised in late 21 by the likes of Gito Soft Capital, Sofinova, and Life Sciences Partners, which were recently acquired by private equity firm EQT. I'm wondering how much of the money these big funds have put to use, because if they're sitting on cash, they're going to be starting to get better valuations. So I know they have to put the money to work at some point. Funding rounds, biggest European last GHO Capital out of the UK. Sofino Partners out of France. The first quarter of every year tends to have fewer funding announcements by life science investors than other quarters, and it's still too early to draw a conclusion for 22. Nevertheless, the drop is noteworthy after huge fundraising by venture capital firms in 21. According to Christian Ealing, managing partner at the Lundbeck Foundation, the pattern is a reaction to the poor public markets. Everybody's coming up to the surface and orientating themselves to the current market, explained, and I think we're all wise to do so right now. Well, there you go, folks. Hope you enjoyed that. Oh, okay. Oh, more to go. After the mega funds raised last year's, European VC firms have amassed big financial muscle to buoy private biotech companies. This could help keep the industry fueled as Europe faces growing challenges such as fallout from COVID-19 pandemic, the war in Ukraine, and the threats of inflation and economic recession. Lots of stuff to be happy about. We've seen funds taking a lot of money recently, and probably they'll will want to deploy some or all of that, said Ealing. So that will stabilize the private side to some extent, but only for a limited period of time. Nonetheless, there are signs that Europe's private biotech scene will stay strong in the long term. Growing VC fund sizes and the recent takeover of the firm Abingworth by the investment giant Carlyle showcases an increasing investor focus on life sciences, a trend that was hastened by COVID-19 pandemic. The perception of biotech is a very risky sector has changed, said Rachel Mears, partner at Gito Capital. Both public authorities and private stakeholders recognize the need for resilient, innovation-rich healthcare systems. The Abingworth acquisition can surely pave the way for other transactions of its type, as we see some stakeholders, such as EQT and Carlyle, using the acquisition approach to enter this part of the biopharma landscape without having to assemble investment teams and portfolios from scratch. Portfolio of private equity buying private equity. Additionally, investors are increasingly doubling down on nurturing Europe's life sciences research, which continues to lead the world in many fields. In the case of the Lundbeck Foundation, majority shareholder in the big pharma Lundbeck, the firm recently adjusted its strategy to increase its attention on startups in the local Danish biotech ecosystem. Where are we? Much as we appreciate the global investing from a biotech perspective, building the industry locally gives us more value creation over and above financial value. Another reason for the increased European biotech focus is that the cost of investing in US biotech companies are becoming too high compared to their perceived value. European companies can be an attractive alternative. Even some US investors have seen that they can get a much cheaper deal by simply going to Europe, So some have started to do that more than before. While hard times are on their way, MIA sees private biotech companies receiving bigger VC funding rounds than in 2018, which could ensure advanced companies can continue funding the clinical development of their treatments. The larger round raises are an important and welcome shift in landscape, as growth stage European biopharma companies need significant capital and benefit from broadened, high-quality investor syndicates, she noted. Overall, VC players are poised to support their portfolio companies as they collectively brace for the difficult times ahead. Some investment firms may even be looking for opportunities created by the tumult. I think as far as you have the nerve and the longevity, you can play an important role in the next phase, concluded Elling. That's right. We have a biotech mini theme, LinkedIn mini group. Take a look at our links below. It's very interesting. Biotech is fascinating, and we've been long proponents of investing in longevity, essentially. So things that are increasing lifespan, CRISPR technologies being one of them. Anyway, I hope you enjoyed and liked. Please, oh, there we go, CRISPR right up there. Hope you like and enjoy. No, I hope you subscribe and like. Greg Silverman, out for now.